Hello, ladies and gentlemen. Good day and welcome to the show on this Monday, the 22nd of June, 2020. You know what? What happens if you slam a basketball down at the ground? The harder you slam that thing down at the ground, the quicker it bounces up. The more energy it has in it, bounces up. Well, that's the way with the economy. This economy that we're in right now got slammed to the ground. Now, I noticed something that's happening. The fear is starting to wane. I mean, when this thing first came through, everybody was frightened. They just basically ran inside and slammed the door behind them, and that's it. I'm not going anywhere. I'm not buying anything. I'm not doing anything. But months have passed. And an awful lot of people, are starting to come out of their homes, starting to go places and do things again. It's happening right now in real time. Well, every time you go somewhere or do something, generally it involves spending money of some sort or another, even if it's just to buy an ice cream cone. You're out of the house. You're spending money. Americans have been hoarding money lately like crazy. And this is part of the effect of why we're not really seeing the full effects of. Now, I'll tell you what really frightens me, guys. It's really dangerous in this situation. Highly dangerous. Is not so much the economy being suppressed like it is now. What's really dangerous is when the economy starts to heat back up. What's happened is they have created the conditions and put the conditions in place. They've created $4.5 trillion just recently, and they've pumped money through the system. Everybody's trying to save money because they know it's a crisis right now, and people aren't spending and everything. But if the economy starts to heat up because people aren't frightened anymore, they're getting out and they're making purchases and stuff, all of a sudden you see businesses starting to reopen and the economy starting to very slowly come back to life. How the economy works is it works in waves, in cycles and waves. And we just had something that just slammed it down. It's all what it would be if it was on a chart. It would look like a flash crash. But you know what happens in a flash crash? Something will drop off the price. Well, oil just underwent a flash crash not long ago, where the price went to negative $40. But now it's plus 40 again today. You get the bounce back, and that's the thing. We've never been crushed down. The economy's never been crushed down with such a hard flash crash. It's almost like a flash crash. Now, I'm not expecting a V-shaped recovery right back up to where we were before. I'm not expecting that. But I am expecting the economy, now that people aren't so frightened anymore, for the economy to start to pick back up a little bit again. Slowly at first, but then maybe to gain steam. And why this is frightening is with all this money they got going out there, with the banks out there not having any, they don't even have to have a reserve requirement. If the banks start lending again and the money multiplier starts to go, this economy could actually go up slowly at first, but start to heat up hotter and hotter and hotter again. And it could actually create the conditions needed for hyperinflation, because the velocity of money then would start to increase. And you'd see prices start to run away. And of course, the Fed, they can't back off with this money creation tool that they've started now, because the markets would crash. They have to keep on. They can't go into quantitative tightening. Even if the economy starts to heat up, if they start to back off too much, but they're not in complete control, because the regular banking system out there has a money multiplier, and reserve requirements have been lowered. They can start lending again. And that's the biggest money creation tool of them all. So, we could see profoundly high inflation coming down the pike, not too far away. Let's get started. Let's open up the charts right here and take a look at this. It says Americans have already skipped payments on more than $100 million in 100 million loans. That's not $100 million. It's 100 million loans. Each loan might, payment might be 200, 400. So we're probably talking billions here. And job losses are continuing to escalate. So I think we're going to see a little bit of a bottom here pretty soon, where things are going to start to turn around. Even though the virus is heading toward its peak, I'll tell you another thing about this. This virus at its core, coronaviruses are common head cold viruses, but this is like a killer head cold, you know? And you ever seen head colds? They'll do the rounds. Everybody at work's got the head cold or whatever, you know? It does the rounds. A few months later, where's the head cold? Gone. And those are coronaviruses, those head colds. If we sit back and we observe how they function, they have like a season. Okay, just like plants and stuff. You know, a tomato crop will have a certain season when it produces the tomatoes. You come back 2 months later, the tomatoes are all gone. You know, it has a season. Well, these flus have a season. That's why they call it cold and flu season. And, you know, when they start to disappear, they disappear pretty quickly, but they reach a peak where everybody in the office is coughing. You know, I mean, this is talking about flus, not coronaviruses, but this is how they function. And then all of a sudden, a month or two later, everybody's over it and it's gone. Well, you know, this thing functions something similar. And I think we're kind of reaching a peak with this thing. And most everybody has been exposed to it in one way or another, you know, I mean, because unless you're some sort of a person that's living in a cave, you know. Anyway, listen, guys, let's get into the markets now and take a look at the silver price today. 17.79 for silver. It's up to 18 cents on the day so far. You know what was up to 18 bucks earlier? Take a look at gold. Gold's at 17.55, and it's up $11.30 on the day so far. So we've cracked through the 17.50 barrier. That's big. That's big. If we can hold above 17.50, that's important. Okay? For gold, that's an important milestone to hold above 17.50. If we can hold above 17.50, you know, I don't think there's anything standing in the way of it heading to 2000. Let's take a look at cryptocurrency. $270 billion market industry, and we're looking at 64.5% Bitcoin dominance, with a Bitcoin price at $94.75 today, and Litecoin's $43.90. We're looking at Ethereum at $240. Now listen, I'll tell you something about these cryptos. The big claim why you shouldn't invest in cryptos for years was because they were very volatile and you could lose all your money. The bottom could drop out and everything. You know, I've never seen anything more stable in all my life for the last few months as Bitcoin. It's been in such a tight little range of between I'll say between 9,300 and 9,700. It's been in that range now for months. Not even moving, not moving down, not moving up. It's been staying very, very stable. So that whole thing about instability might be something that's doesn't hold true as much anymore. That there's wild price swings in crypto. Crypto's been very stable lately. Let's take a look at the Dow Jones Industrial Average. We're looking at up 87 points on the day. 25,958. An awful lot of, you know, people have taken their checks and stuff that the government give them and put them into the stock market using these apps like Robinhood. You know, they've been doing trading themselves, and you know, the stock market has been going up a lot, and you have to consider that the Fed has total support behind this, and they can create as much money as needed. But nowadays, the stock market is traded mostly by these computer algorithms and stuff, you know, an awful lot of it. And so it can move down awfully fast when it moves down, or it can go up very quickly too. I think there's more volatility actually in the stock market now than there is in Bitcoin. It's a more volatile place to have your money than Bitcoin. Let's take a look now at crude oil. $40.10. It's up 35 cents on the day so far. U.S. Treasuries, Now we're looking at falling yields today, and we're looking at 1 basis point on the U.S. 20-year and 30-year, 1.3 basis points. A U.S. 30-year of 1.45, and we're looking at a U.S. 10-year of 0.69%, and we're looking at the yields falling all the way across the board today. Now let's take a look at the dollar index, and the dollar's fallen today. It's 97.06, and it's fell a half a penny today so far. Thank you guys for listening to this market report, and give me a thumbs up. Heck, I really need those thumbs up. It really, really helps my channel. So listen, you guys have a great day, the rest of it. I think things are going to start to pick up and look a little bit better over the next month or two, guys. Really. I think the fear over this virus is going to start to diminish. And also at the same time, I think we're going to see a few green shoots in the economy here and there starting to come back a little bit because people are getting out and getting around, starting to purchase things. I think there's going to be a lack in consumer products out there. Shelves are going to be bare and empty because of the virus. Is cut supply chains, especially to China. An awful lot of things come from China, parts and everything. Parts for your car and everything else. Comes from China, and the shelves are half empty on a lot of things right now. So there's going to be restocking of inventories, and things are going to start to get a little bit more normal, I think, over the next month or two than what they have been. This has been really crazy. Okay, catch you guys later. Bye-bye.